Welcome to Midweek Macro. It is Wednesday, the 18th of February. It is just gone 4:30 Eastern time. That being said, I am in Paraguay. I am in Sunshon, and it is about 6:30 here. It's also about 40 degrees or 100 degrees roughly Fahrenheit, if that's what you deal with. Fair to say it's been very, very toasty. But I'm not here to be British and talk about the weather. What I will say is that we have had a big power cut for the last couple of hours, so I'm hoping the same thing doesn't happen again. But hopefully the video will go off without a hitch. The reason I'm in Paraguay is to tie up some tax setups and things like that. And that leads me to the first bit of housekeeping before we look at all the markets today. And that is to say that on Friday, the 20th of February, so that's 2 days' time, Adam Fired and myself will be hosting a free webinar. We're going to be talking about asset confidentiality. Adam's got a short presentation that he's going to prepare. I will then update you with my personal situation, and then we'll open the floor to a Q&A. It's at 7 o'clock Central Time on Friday, the 20th of February. It's completely free. If you're not able to make it because you've got other commitments, then no need to worry. If you sign up, then you will get a free recording of that webinar sent to you. So even if you're not able to attend, please sign up anyway, and you'll get a free recording. And that's 7 o'clock Central, Friday, the 20th of February. A link to register will be in the post that comes with this video. On the theme of podcasts, it's been a very podcast heavy week on the Contrarian Capitalist. So we have had Syntholine Energy, their CEO, Dan Sutton, was on the show on Monday, sat down about how Syntholine can make synthetic jet fuel for 70% less than the current market price. He also explained about geothermal technology, what they're doing in Iceland. I highly recommend you go and listen to that. Just as an FYI, at the time of recording and at the time of recording this as well, I do not have a personal position in Syntholine, but I have added it to my watch list. And then in the last couple of days, we had North Star Bad charts, both Kevin Wadsworth and Patrick Kareem. They've both been on the show individually, but they teamed up to go through a big set of charts, looked at Bitcoin and why Bitcoin is bearish when in relative to gold or in gold terms. Also looked through equities markets, oil, and why there's still no safe entry into silver. And then today, two recordings done this morning. Gold Core's Dave Russell, who I love this title. You can't make a solar panel out of a futures contract. He did go in depth about the massive disparity between the paper markets and the physical bullion markets. He spoke about gold, spoke predominantly about silver, and of course, other major factors at play. And then a big thank you to Rob Connors, aka the Crude Chronicles. He sat down with myself this afternoon, went through an excellent chart deck, and spoke about geopolitics and, of course, all things oil. The main point being where oil is going moving forwards. And in reality, saying that because of a bunch of factors at play, oil really should be at about $90 a barrel rather than the 65, 66 in WTI that we are seeing today. The Crude Chronicles, Gold Core's Dave Russell there, available to paid subscribers at present. The Syntholine Energy with Dan Sutton, also the Bitcoin bear market. So with North Star Bad charts, those two are available to free subscribers. I should point out, of course, if you're yet to even become a free subscriber of the Contrarian Catalyst, please do so. contrariancapitalist.substack.com. Give the channel a go. Make sure you enjoy the content first and you enjoy the value that's been added, and then, of course, do consider becoming a paid subscriber thereafter. It is $11 a month if you do it on a monthly basis, but if you go for annual, it works out to $80 a year. Or, of course, you can do a one-off lifetime subscription. That is about $345, I think, give or take. Of course, currency fluctuations will vary. And of course, if you run a publication or you run a business, please do speak to your accountant, because I would imagine that a subscription to the channel could be classed as a tax deductible expense as well. But please do check that with your accountant and your tax advisor. Right, let's have a look at where the markets stand. And as mentioned, it's just gone 4:30 Eastern on Wednesday, the 18th of February. We'll go through equities first. We've got the S&P slightly up on the week. It is sitting at 6,881. We have the Nasdaq slightly up on the week, sitting at 24,898. We have the Dow Jones also up ever so slightly on the week. That is sat at 49,662. We have the dollar index, so the Dixie, that is rebounding slightly. Have warned about this on the market wraps on Sundays as well. That the most contrarian thing that the dollar index could do at the moment would be to rebound, and it's off to a good start thus far this week. Should point out, of course, it's as Peter Schiff likes to call it, George Washington's birthday. So I appreciate that was on as part of President's Day on Monday. So it's also been a shortened week in the US as well in terms of markets. And looking at the VIX index, so again measures the volatility of the S&P 500. That is currently down on the week. That is sat at 19.62. And again, that is in a normal volatility range for the VIX. So anywhere between 15 and 25 is normal volatility. Uh, there's a few news stories dotting around. Nothing that I think is, I don't want to say overly interesting with regards to equities, but nothing that is, shouting in terms of the markets. I think the most interesting article that I found thus far is that bond yields have jumped after an extremely ugly tailing 20-year auction. Apparently sees the lowest foreign demand in those bonds between since 2021. Apologies. We spoke ad nauseum about bonds before. Of course, I think you're very familiar with de-dollarization. Again, that's just the most interesting article I think I found this week. Also, the FOMC meeting minutes came out. They're slightly divided. I'll put a link to that as well, and that could have had a bit of an impact. I would also urge you, though, to go and have a look at the video with North Star Bar charts, Kevin and Patrick, because we went through equities and what the charts are showing us. They're showing us one of two things. For the S&P, it is possible that if the like the retracement lines are excuse me, if there's a bounce off of them, it is possible the S&P could go up to about 8,000. Now, I don't know what the odds of that are, but it is a possibility. If that is not to happen, then the S&P chart looks very similar to the Nasdaq, to the Dow Jones as well, i.e., it could start to break down. Now, there are some trend lines, and again, they explain this on the video. I'd highly recommend you go and watch it. That there could be a bit of bouncing around, but it looks as though the trend is in that the US equities markets could be trending to the downside moving forwards. Now, they've also mentioned the dollar index as well. They went through that. Now, that broke a key trend line at the end of January. Of course, it's bounced back so far this week. And again, the contrarian play is for it to continue to bounce to the upside. But they also looked at not just the dollar itself, but also the Swiss franc, the euro, and even the British pound. And they're actually getting stronger, those three currencies, in comparison to the US dollar. And of course, as you know, the euro is very heavily weighted in the dollar index itself. So again, that's something to watch out for moving forwards. In terms of European equities, and again, we'll go through this on the market wrap, they're slightly different. If we look at, for example, the FTSE 100, I'm just going to bring up the chart and the numbers in front of me. So again, that is on a tear this week. That's up 2.14%. That is up and sitting at 10,674. If you look at the chart, ever since April of last year, obviously with Liberation Day and tariff tantrums and so forth, that trend has been significantly upwards for the FTSE 100. I'll bring up the DAX over in Germany. It's a funny old chart, the DAX, because a lot of German spending is just government fueled. So it's not exactly the most productive thing going. But then again, they did do something similar in the 1930s, and the German stock market actually done a right back then. The rest of history in that period speaks for itself, though. But the DAX itself, at the time of recording, that is sat at 25,278. That is ever so slightly under its all-time high, which was 25,507. That was week commencing Monday, the 12th of January this year. So it's got a little bit further to go. But again, it looks like it's trending to the upside. And I'll just quickly bring up the Nikkei over in Japan. Again, we mentioned this last week. After the back of the snap election, it skyrocketed a week ago Monday to over 62,500. Finished up eventually on the week, and thus far this week it's up a whopping 42 points. So it's up 0.07%. It is showing a red candle, but a positive number. Now, the reason I mention these markets is the other dynamic we have to think about, of course, apart from currencies strengthening and so forth, is that if confidence is being lost in the US markets, or people believe that they are too overvalued, then that currency, those investment flows are going to go out of those markets and into somewhere else. And again, other equities markets, as we've just mentioned there, the FTSE 100 over in the UK doing really well. The DAX over in Germany, of course, doing really well. I'm also well aware that the FTSE 100 is not the best barometer to measure what is actually going on in the UK. But in terms of a market index, it is doing very well. And again, if we've got large amounts of equity flowing out of one market into another, that would explain and can explain why we're seeing the differences between how the US markets are performing in comparison to the other markets around the world. I will also point out, and again, this is covered in the weekly market wrap every Sunday. Now, the NASDAQ here, if I look at the moving averages, they look like they're starting to turn. They're sort of at that precipice there. So sort of at the top there, it looks like they're going to start trending down. So that will be interesting to keep an eye on the NASDAQ. The S&P 500, again, it's down from where it was a few weeks ago, but those moving averages, again, similar to the NASDAQ, starting to get to the precipice there. The only one I think is different is the Dow Jones. That, again, at the time of doing this recording, they are still clearly trending in an upward direction. So we also might get a bit of disparity between what the Dow Jones does and also the NASDAQ and the S&P. In effect, watch this space. Over to commodities, we will talk a bit more about oil because that's had a good week thus far. So again, at the time of recording this, we have gold slightly down on the week. It is at $4,980. We have silver slightly, green candle, but actually down on the week. Sorry, that is sat at $77.20. Quickly bring up platinum. Platinum again slightly up on the week. It is sat at $2,080. Look at palladium. Palladium is red candle but green numbers, so it is actually up on the week. It is sat at $1,716. A copper on a per pound basis in US dollars is it's pretty much unchanged actually. So far, it is at $5.83. The nat gas spot on Pepperstone we look at, that continues to go to the downside. That's down 11.72% on the week thus far, 45 cents. It is currently sat at $3.38. That is a hell of a come down from 2.5-3 weeks ago when it was around $5.50. So a big change there for nat gas. What else have I missed? I've done copper. Should check on the uranium prices. Again, we look at the U308 futures. Again, I'm well aware that the market is opaque. I am aware of that. So it's not always the best barometer of uranium itself. Again, that is though up on the week. It is sat at $88.75. Of course, I mentioned oil. We got WTI up 3.4% on the week, $2.14 up. It is at $64.96. Now with oil, and I'm going to look at this from a short, medium, and long-term perspective. I think most of you listening to this will understand that oil for the long term is very bullish. You probably don't believe the this oil glut narrative either. I know that I don't, but in the short to medium term, it looks like it's range bound. Now I know there's a lot of data out there, and a lot of people are going to say a lot of different things. But if we take out the oil glut and let's just say that doesn't exist, then that does create a bullish picture as well. But we're also seeing various tensions re-flare up between the US and Iran. And I think that oil is still a very news headline driven market at the moment. The caveat would always be the caveat that if there is a bigger recession, which is possible, if that were to happen, I would imagine most things get sold off. So demand might dry up for the short to medium term. Again, you might see selling of gold and silver as well, if that's part of a broader sell-off. That's what concerns me by looking at the Nasdaq and the S&P. I'm not saying they're going to fall off a cliff, but you never know. Watch this space. Yeah, even when someone like Buffett and Berkshire Hathaway, I believe, have started selling even more of their key positions in companies such as Amazon, he's normally one step ahead of the game. So that's worth watching on. I will write about that in the market wrap this coming Sunday. What I find very interesting by all of this is that, as usual, we're being fed a certain narrative. That's not necessarily true. So short to medium term in oil, I still think it's headline driven. So if things happen between the US and Iran, yes, of course, that oil price is going to go much higher. If we do, however, economically start to downturn, and the stock markets fall off a cliff, the equities markets don't do too well, that could lead to a broader negative sentiment. That could lead to more selling in oil. That could push that oil price down. I've got two different views this week. Again, I mentioned some of the podcasts from earlier. So we have North Star Bar Charts, who both of them said on the video that really oil they are neutral on at the moment because there's no definitive move to the upside based on charting analysis, but there's also no definitive move to the downside. They've got to wait to see how the chart develops in order for them to make a decision. So that's their position. We've then got Rob Connors from the Crude Chronicles. Again, he was looking at various metrics, some excellent charts, I have to admit, on there. And what his charts are showing is that oil looks like, again, not definitive, oil looks like it's rebounding off of $60. And to him, it looks like $60 is that floor moving forwards. Now, I don't know is the honest answer to that because there's so much information out there. Even when you speak to incredibly smart people, including those two as well, and if you listen to Dr. Anas Al-Haji as well, it's very difficult to make a case either way in the short to medium term, in my opinion. But in the long run, yes, oil is going to go sky high. I believe that silver is going to go much higher, and that silver to oil ratio over time is normally quite consistent. So therefore, if that ratio is around 1-to-1, which again, historically speaking, in commodities bull markets, it has been. So if you think silver is going to go to say $350, then the chances are oil is going to go to $350 as well. Again, don't take that as an absolute contrarian capitalist guarantee, but these are the things we have to be thinking about, especially when it comes down to looking at investments. I appreciate that most of you listening to this are going to have a position in gold and or silver, maybe platinum as well. You will have a position in physical bullion. Some of you also might trade as well. And I will emphasize this every time I do a video. Your mentality, if you're trading, is going to be completely different to if you're holding physical bullion because you're going to be looking at different time frames. If you're holding physical bullion, you are probably thinking 5, 10, 15 years ahead. You might even be thinking, that's it, I'm never going to sell it. This is generational wealth. And that's absolutely fine. If you're trading, you're going to want to know what's going on in the news. You're going to, like silver going up to $121 and then down to 64, a week or two later. If anyone was trading that, you might have had your pants pulled down if you weren't taking necessary fiscal responsibility. Whereas if you were looking to accumulate from a physical point of view, again, how you react to that, yeah, okay, like myself, I looked at my asset sheet on Excel as I do once a month. Yeah, the timing wasn't great for the 1st of February, but it wasn't keeping me up at night. If I was trading that, and again I had a position and it had been trimmed in half, I think I'd be grayer than I'm going. So that's the difference. And I always want to highlight that on these videos, that trading physical metal, or sorry, trading the paper markets or any commodities, is going to be completely different to just buy and hold policy. As always, I do not and cannot give out financial advice. What I would say though is, if you're looking to purchase more bullion, dollar cost averaging is probably the most sensible way to do it. Dave Russell said this earlier on: keep a diary. So if you're making investment decisions, keep a diary. Why have you made that decision? What rationale have you got? How did you feel at the time? If you start doing those things, you'll be able to reflect back on that in the future. Also, keep a spreadsheet so you know what your dollar cost average is as well. So just some tips, so to speak, for moving forwards. With regards to the end of month macro, I'm delighted to announce that Tom Bradshaw, who has appeared on the podcast twice before, he has agreed to do the end of month macro for February. We're going to be recording it on Saturday, the 28th of February. So so I'm really looking forward to recording with Tom. We'll see how that goes, and then we'll see what we will do with that moving forwards. On gold, and again, just to reiterate a point that I think it's been made by a lot of people, gold is going to be the chart to watch. And the reason why gold is going to be the chart to watch is because gold normally leads the way. Now, we know that, in the last few weeks, gold has been very choppy. Most commodities have. But if you look at the chart going back to 2024, I think, start of 2024, gold has been very bullish. And in these commodity super cycles, gold normally sets the way. So gold is the key chart to watch. If gold continues to go up, onwards and upwards, the chances are silver is going to catch up with, or start to play catch up again. The chances are that's going to be the same in platinum. That's going to be the same in palladium. Hell, could even be the same in copper as well. With everything that we discuss, any equities charts, any commodities charts that we discuss, gold is the principal chart that we need to be paying attention to. Because if that continues to surge to the upside, or continues to step its way to the upside, then again, the chances are everything else is going to do the same. Doesn't mean it's going to go up in a perfect line. But again, if you're under the impression, or you've got the 30,000-foot view and understanding that in the long run, what's going to happen is we're going to see more currency debasement. We're going to see things. What's the word I'm looking for? We're going to see your fiat currencies get devalued. That in turn means that the price of commodities is going to go up, because that's just how it works. It's like an opposite effect. So if you think that the Federal Reserve is going to print more, or the Bank of England is going to print more, whomever it's going to be, chances are you're going to see commodities in those currencies go to the upside. I imagine we'll start seeing the same in the yen as well. I mentioned the snap election they had on the 8th of February, and they've ended up with a super majority, which is absolutely fantastic for them. But it also means that Japan's likely to see a lot of reforms. Those reforms, when I've quickly read about them, indicate there's going to be some significant changes, and a lot of yen is going to get printed. Japan won't be able to save the bond markets and the currency. It is just not going to be able to do both. It will likely look to save the bond markets because they're more important than the currency itself. But watch this space with regards to reforms, because if they do crack on, now they've got the super majority, they can push these things through in the Japanese lower and upper house. Therefore, you might see a lot of printing that might see the yen get devalued, and therefore price of gold in yen could go up as well. And also worth watching for the US dollar yen charts as well. And again, they're covered every week in the market wrap. If any country, and I could be completely wrong when I say this, but if any country is likely to break first, I think it'll be Japan. So there you are. I said it. Apologies if you're watching this and you're Japanese, but it is worth keeping an eye out for, just to see what happens. I could be completely wrong, but I do get this feeling that that is going to be the first country to break. And of course, that will then have significant implications worldwide. Just want to go through a couple of articles here. And again, I'll link to these in the show notes as well. I mentioned about oil, I mentioned about the USA, and I mentioned about Iran. Trump has told two-tier Keir Starmer over in the UK, do not give away Diego Garcia. So for those who want to know what that is, it's not a person. It is indeed a military base in the Indian Ocean. Now, yeah, we can be critical of colonialist countries all day long. I appreciate that I'm from a country that once had one of the world's biggest empires. We're far from perfect, but I do think in the day and age of the 21st century, giving away a big bunch of territory or important strategic territory is not a good thing at all. And I think that many people in the UK would agree with me. The fact that it's costing the UK a lot of cash as well does not help. But it's interesting that President Trump has come out with this. He actually came out with this afternoon um, with regards to why Britain must not give away the Indian Ocean territory. Because he basically said it could be crucial for use in a potentially imminent attack on Iran. Watch this space. I also mentioned that oil is a very news headline driven commodity at present. So again, if this does spice up, so to speak, then the chances are you're going to see that oil price continue to go to the upside as well. So that is worth watching on. And then on the theme of commodities, also to do with the Trump administration, although actually, arguably so, this is more the DOJ that's getting in the way. So over in, I believe it is Alaska in the Bristol Bay region, what's happened is that the Trump, and this is how Zero Hedge is reporting it, that the Trump administration has blocked what would have been the largest copper, gold, silver, and molybdenum, I think that's how you pronounce that element, a molybdenum extraction site in the US. This is after the DOJ filed a 143-page brief late on Tuesday defending the Biden Environmental Protection Agency, so that's the EPA, their 2023 veto of the controversial Pebble Mine project in Alaska's Bristol Bay region. In effect, what Pebble Mine could produce is 6.4 billion pounds of copper, 7.4 million ounces of gold, and about 300 pounds of molybdenum, along with apparently 37 million ounces of silver. And this is all because they're concerned about salmon fisheries. So I'll do a big thumbs up there. This is something that really bugs me. Again, I'm not even from the USA, but I've had enough of this, nonsense in the UK as well. Is that if we are setting up mineral vaults, like I appreciate President Trump and the administration has done, silver is on a critical minerals list now, of course. And if we're getting into this age and era of critical minerals and trying to be as energy secure as possible, because in effect, China produces most things in the world and its stranglehold on critical minerals is undeniably strong. So if countries want to battle back against that, what they need to do is to go and do mining. That's what they need to do. It's not the most environmentally friendly thing out there. I appreciate that. But when you get a story like this and you look at the numbers involved in terms of what could be produced at this mine, and basically what the DOJ has argued, and they've argued it successfully, is that discharges from the mining operation is going to cause unacceptable adverse effects on salmon fisheries. So congratulations. It seems as though the critical minerals in the USA, they've taken a hit because of some salmon. That's really what I've got to say on that. It's infuriating more so that, again, in this day and age and with everything that's going on and with energy security, critical minerals, that government agencies, and again, seemingly just want to get in the way. I'm sure there'll be more to the story than I've given it. Sorry, but again, to me, it just doesn't make much sense. I think in the time of me talking about it, the Chinese would have finished building the damn mine because that's the way that they're thinking. They're thinking they're playing chess, everyone else is playing checkers. This is what happens, and we sit here and wonder why in the West that China is so far ahead of most things in the world because we've got to deal with shit like this. I've got no better way to say that. It's not much better in the UK either. And again, we've got some very dumb policies over in the UK. We've also got some very dumb people in charge as well. And I'll finish off on a story about uranium. And again, this is something I think most of you are already going to know, but it's basically big tech, metas and so forth. They're looking to turn to uranium as data center power demand source. That's not a surprise to read. Again, I appreciate there's going to be people that are watching this video that might be new to the commodity space and might not know about this. This is why I bring that article up. I appreciate also that the futures markets in uranium, again, they're not very transparent yet, if they're not just transparent at all. But again, if we're looking at uranium stocks, or we're looking at uh, how things might play out in the next 10, 15 years, stories like this are really, really, really going to help. So again, this story comes from the Canadian uranium miner Next Gen Energy, and again, it's as their CEO quote. Actually, I'll read this quote out before we finish off. So Next Gen Energy CEO uh, said the following, and I quote, "It's coming. You've seen it with automakers. These tech companies, they're under an obligation to ensure the hundreds of billions that they are investing in the data centers are going to be powered." End quote. So again, if you're looking to power that, what do you need? You need good baseload energy. What's your baseload energy? Coal, oil, natural gas, and uranium. What's the greenest and cleanest of that? That is uranium. Therefore, put two and two together, and we make four. So this is again the overarching thesis for uranium. I'm not saying go out and buy all these uranium stocks. So that, of course, they're all different. But again, it gives you an idea that this is the way the world is going. This is what we are looking to do in terms of energy moving forward. So I just wanted to bring that to your attention before we sign off. And I'll finish with where I started, which was that Adam fired and I. Adam is an international expert. He's very good at asset confidentiality. He's appeared on the Contrarian Capitalist before. We are hosting a completely free webinar on Friday, the 20th of February. That is this Friday. That is at 7 o'clock Central Time. We will be looking at the confidentiality of your assets. We're going to be looking at gold, stocks, Bitcoin, property, and much more. We're also going to be looking at strategies to internationalize your assets, whilst, of course, enhancing privacy and security as well. That's Friday, the 20th of February, 7 o'clock Central, 8 o'clock Eastern. If you are not able to make it, do not worry. Please sign up for the webinar anyway, and you will get sent a free recording of that webinar. And again, it is completely free. And one more time, Friday the 20th of February, 7 o'clock Central, 8 o'clock Eastern. Completely free. If you're not able to attend, don't worry. Sign up anyway, and then you'll be sent a free recording of that webinar. The registration button is going to be in the post that comes with this video. So if you're not yet a subscriber of the Contrarian Capitalist, please become a subscriber, and then you will get that notification, and then you'll be able to sign up to that webinar as well. That's contrariancapitalist.substack.com. I'll have a fantastic week. Again, there'll be a couple of podcasts released to the general public later on, to free subscribers, I should say, later on this week. I'll be back with the commodity wrap on Friday, and then, of course, the market wrap on Sunday. Enjoy the rest of your week, and speak soon.